Welcome to the Deep Dive. We're the place you come to get the signal from the noise, taking your sources and really digging into them for you.
That's right.
Today, we're looking at a real giant of Indian infrastructure, IRCTC, the Indian Railway Catering and Tourism Corporation.
Yep, the big one.
And specifically, we're looking at its stock. Our mission really is to unpack something quite interesting. How does this huge government-owned company, maybe not, the first name you think of for fast innovation,
Right.
How does it become this incredibly stable, predictable wealth builder in India? And crucially, what could that mean for you?
It's a great question. There are some surprising aspects to it.
Definitely. Expect some key insights on its unique monopoly and its sort of quiet performance. Let's jump right in.
Okay, so to really get IRCTC, you have to start with its role in India. I mean, its foundation.
Right.
We're talking about a company that holds a 100% monopoly.
100%.
100%. An online railway ticketing across the entire country.
Wow. So every single digital ticket.
Every single one. If you book a train ticket online in India, it goes through IRCTC, period. There's no plan B, no competitor.
Okay, 100% monopoly. That phrase alone, for a lot of people, it might, raise some flags, concerns about efficiency maybe, or innovation stalling.
It's a natural reaction.
So what's the actual picture for a company like this, a government monopoly in such a huge, dynamic place like India? How does it juggle serving the public and, making money?
Yeah, that's really the core of it. It's not like a private monopoly that's just chasing profits. IRCTC is a PSU, a public sector undertaking. Government-owned, government-operated, so it has this kind of dual mandate.
Okay.
It needs to generate revenue, yes, but also has to provide an essential public service. So its whole business model is shaped by regulation, making sure people have access, keeping things affordable, not just cranking up profits.
Right, not just max returns.
Exactly.
Yeah.
And it's fundamentally tied to Indian Railways, which is, massive. It's the world's largest employer.
Wow.
And it's India's most used way to travel, by far.
The scale must be immense.
The human scale is almost unbelievable. Over 2 crore people, that's 20 million travel by train every single day.
20 million daily.
Think about putting the entire population of Australia on trains every day.
That's staggering. And with India now being the most populous country, train travel isn't just like an option, is it?
No, absolutely not. It's fundamental for millions of people, for the economy.
The source material really hits this point hard. It says something like, you can stop eating buttered chicken for a week. But India isn't going to stop traveling by train. So if IRCTC failed, the sources say it would take something, cosmic.
That's a good way to put it. Cosmic.
Yeah.
Because if IRCTC just stopped working, it implies Indian Railways has collapsed.
Right.
The country basically grinds to a halt. So, it's not just another company. It's truly indispensable national infrastructure. That's the bedrock. That's its stability.
Okay, so barring, nationwide teleportation suddenly appearing, or that cosmic event,
IRCTC is absolutely here to stay. So, given that, this incredible scale, this fundamental role, the big question for listeners has to be, how does it perform financially?
Right.
Let's look at the growth figures, because as you hinted, it's maybe not about flashy headlines. It seems more consistent.
Exactly. Let's look at the performance. The numbers, they tell a story, but it's one of stability, not really explosive jumps.
Okay.
The 5-year compound annual growth rate, the CAGR, that's a solid 30%.
30% over 5 years. Okay.
Then, over 3 years, it's 20%. The 2-year CAGR drops to 10%. And the last 12 months, it's showing 7%.
Okay. So 30, 20, 10, 7. Those are declining rates.
They are declining, yes.
Yeah.
But crucially, they're still positive. Steady growth.
Right.
This isn't a stock that's trying to, double overnight. It's more about consistently building wealth. Quietly.
Okay, but that declining growth rate, 30 down to 7%, some investors might see that and think, red flag. What's the counter argument there? Why is it still appealing? That's a fair point. The quiet wealth builder idea isn't about the percentage growth rate skyrocketing.
Yeah.
It's about the sheer consistent volume of business and how essential it is. Even if growth slows to, say, 7% a year. When you're the platform for 20 million journeys a day, that 7% still translates into massive, very predictable revenue.
Okay. The base is huge.
Exactly. The engine here isn't some hot new product. It's the slow, steady expansion and modernization of India's railways. plus more and more people using online ticketing, this massive growing population.
So it's making you money quietly through just sheer scale and necessity?
Pretty much. Scale and indispensability.
Okay, that makes sense. Which leads us naturally to risk. Every investor wants to know, how much can I relax with this one?
Always a Q question.
And we have this metric, Surinder's risk score, also called the Sleep Easy Index.
Right, the Sleep Easy Index. I like that name.
Me too. On a scale where 100 means you sleep like a baby, total peace of mind, and 1 means, well, you're doom-scrolling stock prices at 2 a.m. having a panic attack.
We've all been there. Maybe.
Maybe. IRCTC scores an amazing 98 out of 100.
98,
Yeah,
that's incredibly high for any company on the stock market.
Yeah.
Almost perfect.
Almost. So what stops it from hitting 100? What's the tiny catch?
The small caveat, the reason it's 98, not 100, is because it's a PSU, government-owned.
Right.
So the government could theoretically step in and do things. Introduce a random stock split, for example.
Which just means splitting shares to lower the price per share, right?
Exactly. Or they might change pricing policies, things like that. These actions could, if it wouldn't just be the company failing, it would mean Indian Railways itself has collapsed. Trains stop. Train stops moving.
Wow.
And if that happens, honestly, your stock portfolio is probably the least of your worries.
Oh, good point.
We'd all be, like the source jokes, looking for bullet carts or hoping that teleportation network finally came online.
Right. So its failure implies a much bigger societal breakdown.
Exactly. That gives it a level of, well, existential security that most other investments just can't claim.
That definitely puts things in perspective. Okay, so we know it's incredibly stable, fundamentally important, very low risk.
Right.
How does someone actually approach investing in it? Strategically.
Right.
Let's look at the different ways you might tailor an approach, depending on, say, how long you plan to invest.
Yeah, connecting it to personal goals is key. And IRCTC, surprisingly, offers a few different angles.
Okay.
So for the long haul, let's say 5 years or more, seems almost tailor-made for SIP-style investing.
SIP, systematic investment plan.
Right, where you put in a small fixed amount regularly, every month, say. This lets you average out the market ups and downs over time. You're not really just buying shares in a company. You're kind of buying a tiny piece of India's daily heartbeat, growing steadily, quietly, along with the country itself.
Buying a piece of India's daily heartbeat. I like that.
Yeah.
What about shorter timelines? Say, looking at just 1 year.
For a shorter-term view, maybe a one-year play, the analysis suggests looking for a buy price around 900.
Okay.
900, and then aiming for an exit somewhere near 250 to 1100. Generally, it's considered a pretty smooth ride in that time frame.
Unless,
the government throws a curveball, like a sudden change in fare policies or something significant like that.
Yeah.
But usually predictable.
Got it. And for the really short-term folks, the traders,
Yeah.
maybe a 3-month window.
Even shorter term, yeah. For traders looking at maybe 3 months, this suggested range is about 880 on the low end to 150 on the high end. For swing moves, things like budget announcements or news about tourism initiatives often give it those little bumps, those spikes that traders can try to catch.
Right, those small actionable movements. Now, beyond those standard approaches, the source mentions something called Surinder's stress-free swing strategy.
Ah, yes, the stress-free strategy.
It sounds appealing. For people who don't want to be glued to market charts but still want in, how does that work with IRCTC specifically?
It's actually quite a neat approach, especially because of IRCTC's nature, that predictable long-term upward trend and relatively low volatility.
How does it work?
It suggests buying a fixed amount, say 1,000 euro, 2,000 worth, every single month. It's like clockwork, regardless of whether the market is up or down.
Okay, consistency is key.
Exactly. You're not trying to time the market, not waiting for a crash to buy the dip. You just keep buying month after month.
So you're averaging your cost.
Precisely. You're consistently averaging down your purchase price over time. And because the company is so stable and its long-term path is generally upward, when the stock does have its typical quiet rallies, your average cost base is likely to be quite favorable.
Which means
You can choose to exit when you feel good about the returns you've made, without all the stress and guesswork of trying to perfectly time buys and sells.
Okay. So for that strategy, it's less like buying a stock and more like The source called it a monthly train pass to wealth.
That's the analogy, yeah.
Quiet, maybe a bit boring.
But potentially extremely effective, yes. It really highlights how you can leverage the specific characteristics of a stable, essential asset for low-stress investing, if that fits your style.
And that really brings us full circle. There you have it, our deep dive into IRCTC.
We covered a lot of ground.
We really did. We looked at its unique, unparalleled monopoly, its sheer operational scale, and just how fundamentally important it is to the way India moves every single day.
It's hard to overstate that importance.
Absolutely. And think about if you've ever booked a train ticket online in India, you've directly used this company.
You're already a customer.
Exactly. And now, hopefully you have some insights into how its quiet predictability might potentially work for you as an investor.
Yeah. And maybe, as a final thought to leave you with,
Go for it.
consider this. The basic foundational infrastructure, the things people rely on every single day in a huge growing nation like India, well, that creates some very unique, often overlooked opportunities. Understanding these quiet giants, these indispensable companies like IRCTC, it doesn't just give you investment ideas. It can offer surprising insights into, broader economic trends, the very pulse of a nation that's constantly in motion. Something to think about.
There's no manual override filter.